we got to go over Bitcoin. As you guys can see, Bitcoin is up a total of 22% inside of the last 7 days. And it's been pumping a lot, but now it's kind of been slowing down. So we're going to talk about what's happening right now. Remember, I'm not a financial advisor. None of this is financial advice, but let's get straight to it. So as you guys can see here on the charts, we're on the 4-hour chart right now. We had this rising wedge, right? We had this, not necessarily rising wedge. I mean, we had this bull flag. So bull flags, as we know, are bullish patterns. So you can see right here, bullish flag, right? You can call it a bullish flag, a bull flag, whatever. But you can see we have the bull flag, and then we broke out to the top of this channel here. So we broke out all the way up here to the Fibonacci resistance at 80K, right? So now we're also forming a rising wedge on top of that. So now this is a rising wedge, right? It went from the bull flag immediately to the rising wedge. And rising wedges are bearish patterns, right? So if we are inside of this bearish pattern, which is a rising wedge, that's so far one bearish pattern for us, right? We're going to be looking at multiple areas of confluence to see if we can see whether or not we're actually bullish or bearish. So far we have one bearish area, which is the rising wedge. And then we have this Fibonacci resistance that we were hitting. So that's something else that could be bearish because now we're hitting resistance and we could have a pullback, right? So that's two right there. And then we also have some things that can be looked at as bullish right now. So this is what we call bearish divergence on the MACD. So if we have bearish divergence on the MACD, we're getting higher highs on our charts and our prices, and we're getting lower highs on the MACD. And as you can see here, if we start getting more buying pressure coming in, this is just going to result in another lower high on the MACD, which will then result in another higher high on the chart, which could get all the way up to 83K, right? So that's why I have 83K marked right there. And this has also been a really big support area here on the way down. You know, back in December, we used it multiple times as support, as you can see there. And we've used it as support back inside of 2025 of March as well. That was an area that was pretty heavy back then, right? So that's why 83K is so significant to, you know, what's going on right now inside of the charts. So there's a possibility that we could push up to 83K if we get that bearish divergence there. So I guess that's bullish temporarily till it gets to a certain price, and then we have that pullback. So what I'm watching is whether or not we pull back now or whether or not we push up to somewhere like 83K and then have the bearish divergence. And is the bearish divergence going to be strong enough to push up to 60 or 83K and then continue to the next Fibonacci at 89K? Or is it going to be a weaker push that only gets up to 83K and then dumps from there? So that is another thing that you've got to ask yourself. Now, on the 4-hour chart here, you can see that on the percent R trend exhaustion, it's pretty overbought here, but this could stay overbought for an extended period of time. And this has happened a lot on the MACD before. This is something where, like, if it happens, then, you know, you better be ready for, you know, something big to happen, right? But if you also look at the SPY, you can see the SPY has done this and the price has just kept going and going and going because it stayed overbought for like an extended period of time on the 4-hour chart. And then if you look here, the whole time it was just grinding up that whole time, just creating higher highs. And we also had the bearish divergence and it just kept creating lower highs on the MACD while simultaneously creating higher highs on the chart. And the percent R trend exhaustion stayed overbought for an extended period of time. So it kept climbing and climbing and climbing, right? And that's not too rare for the S&P 500, right? It's not too rare for the stock market. And it could possibly happen inside of Bitcoin also. But the real question is, again, will we pass 63K and will we have enough strength to push all the way up to the 89K resistance at that next Fibonacci level? So we got to see whether or not we're going to do something like that and grind upwards. But it doesn't seem like it's going to be something astronomical, but you can never tell with this type of stuff, right? But anyways, that's the 4-hour chart, and now we can break down the daily chart here. We're also a little bit overbought on the daily chart for the percent R trend exhaustion here, but you know, there's no telling how long it could stay overbought for. You know, sometimes it just taps it like back here and then immediately pulls back. Sometimes it stays there for longer and then grinds upwards. So, only time will tell when it comes to that. As for the MACD on the daily chart, right now it's just starting to show a lot of buying pressure. Maybe we can have another area of bearish divergence where we're starting to create higher highs on our charts and the lower highs on the MACD here. So maybe we can have another bearish divergence there so then we can, continue to create those higher highs. So I think that is a possibility for the daily chart. And again, that would push us up to 83K. But the real question is, will it pull back, hit 80K, and then push back up to like 89K, or will it continue to dump? And that is what the divergence is really going to tell us pretty much. And then if we look at the weekly chart, I was mentioning this inside of my previous videos that this 50-day moving average up here, this 50-day moving average is pretty much acting up as a resistance, the red line here. And we've pretty much tapped that. And the wick, the candlestick, tapped it on the weekly chart. And now it's kind of pulling back just a little bit. But one thing that you got to keep in mind is that this is the weekly chart, which means every Monday, this thing is going to change, right? The last time it changed was yesterday, right? That's when this new candlestick was created. What really matters is where does this week close, right? Where does this week close on this candlestick, right? Is it going to close, below the 50-day moving average, or is it going to close above it? If we go into next week above the 50-day moving average, which means August 31st, that is the start of that new week in the new candlestick, August 31st, which is next Monday. If we close above the 50-day moving average, we're more than likely looking more bullish than anything. If we close below the 50-day moving average, then that means we're looking more bearish than anything, right? So that's what we got to see. And it's going to take a whole week for this to happen. So 31st of August, we'll know what's happening, right? As for now, we just got to kind of wait. If you look at the MACD here, you can kind of see this is bullish divergence, the opposite of bearish divergence. And this is pretty much just showing that you're getting lower lows on the chart and higher lows on the MACD. And as you know, we've been in a bear market, so we've been creating lower lows in our bear market because of this divergence here. But now we're getting that buying pressure in. So is this the end of that bullish divergence, or are we going to get another lower low? And this is where, patience comes into play, because sometimes you just got to wait to see what's happening. If this is the end of the divergence and it continues to go up, yeah, you're going to miss all this buying pressure. But then when you get that pullback, you're inside of the bull market now. That's when you start to really, go hard if it's a bullish, right? But if it's bearish, then that means that we can create another one of these lows right here on the MACD. But how much lower could it really go, right? So we'll have to see what's going to happen there. But yeah, the weekly chart is looking a little bit mixed right now, a little bit mixed. So we'll have to wait, be patient, and see if it draws down a little bit more. All right, but yeah, this is pretty much all I got for that. And it does seem like there are a lot of people that are switching bearish now. So this person here, Cyclop, he says, if Bitcoin fails to hold above 83K, we're still in a bear trend. If that's the case, I'm expecting a dump towards 50K by November. But if it does manage to reclaim and hold above 83K, then I'll start buying around 69K. So he's saying if it's holding above 83K, he's going to start trying to buy, a little bit more if it pulls back, right? So if it does manage to reclaim above it, right? So we'll see what happens there if it pushes up to 83K. But still, I would be extremely, extremely careful listening to anyone at this point. Nobody can predict it. And that's why I'm telling you guys, you got to just sit and wait and then react on what's about to happen when it happens. But right now, it's best to, wait around. On the 50-day moving average right here, like if we go above it and we hit 83K, then that kind of tells you, all right, the bulls might be trying to take over. But you can't 100% say they're going to unless you break out above that and then get to 90K, right? Or 89K technically, 89K resistance on the Fibonacci. But if we did something like that, then okay, that's when you're like, all right, it might be a bad time to be a bear. It might be a good time to switch to the bull side, right? That is when it would look like that. And then as for this guy, this person says Bitcoin pump to 80K, wasn't real demand. Shorts got squeezed. That's what moved this. No fresh buyers showed up to fund it. Moves like that usually just give it back just as fast. And he said he's watching for a fade. So he's saying there's going to be another dump. So we'll see if there's going to be another dump. There's really no way of telling if there is going to be. But like I said before, going back to the charts, looking at the 4-hour chart, if we get that bearish divergence here where we're creating higher highs, there's a possibility it could push up to 83K and then dump from there. There is even a possibility that it could push up to 89K and then dump from there, right? So you have to be extremely careful in these times, right? But if you're a long-term holder, then that really doesn't matter, because I'm sure buying Bitcoin right now is going to be good, because 5 years from now, Bitcoin is going to be more than 78K, right? More than likely, 5 years from now, it'll be more than 78K. So even if you bought right now and you're a long-term holder, it really doesn't matter, right? But it is good to know this if you're trading. So anyways, this is all I got for you guys today. Remember, I'm not a financial advisor. None of this is financial advice. Hit the like button, subscribe, all that good stuff. Check out the link in the description for FOMO. It's like a social media trading app where you can trade meme coins and really all types of cryptos. You can trade every single crypto on here. And you can look at coins that have just graduated from Pump.Fund and other launch pads, and from Robinhood launch pads, base launch pads, literally everything that you can think about trading, all inside of one app. And then on top of that, you have leaderboards. You have a lot of social media aspects to this, where you can see the top traders, how they're making millions of dollars and what they're making those millions of dollars in. Then you can actually copy some of the trades, which could be bad for you, but it's all your choice, your decision. Like this person here, Poor Goat, average entry at $2.8 million market cap. This thing's at $67 million market cap now. So this guy went from $96,000 to 1.89 or $1.9 million now. Wow, and it just went up. So yeah, he's up over $1.88 million. So literally $1.9 million made off of $96,000 on this one coin. And you can see he has a lot of transactions, but his first transaction was July 26th. So he literally went from $100,000 from the end of the July to the end of August, which is 1 month. So he went from $100,000 to $1.9 million in 1 month. That is absolutely insane. And props to him. But you can do this type of stuff on this app, and that's why I'm using it. I'm watching, and you guys can follow me on it too. You're going to be using my discount code, and you can get a good discount on there. Actually, I think it's like 10% or something like that, 10 or 25. I don't know. I got to look at it, but you can get a discount to your trading fees, and you can follow me on there, and you can see the different trades that I'm taking. And as you can see, I'm not up as much as that other guy because I haven't put as much in, but I'm up $32 in the last 24 hours and just a little bit overall, $26 overall. So I'm doing all right, and I think I'm going to try to take this thing up to like $10,000. That's really the goal right now. It's $100 to $10,000 goal. That's what I'm doing. But anyways, you guys can follow my journey on here, and you can go ahead and check it out too. The main coin I've been trading on here is Base Juice, and this is funny because this Base, they tweeted something about drinking juice and Base, and then this meme coin came out, Base Juice, right? But I called this coin all the way back at 400K. Well, no, where did I buy it at first? Yeah, I first bought it at 500K. So yeah, so I bought it around 500K at first, and then it went all the way up to 3 million market cap. But I sold early, so I didn't get the benefit from it all, which really sucks. I really should have stayed in more, but But yeah, definitely check it out. Check it out. I think this is going to be a really good app inside the near future. I think everybody's going to be using it, and it's getting adopted pretty fast amongst the crypto trading community. So I think it's probably in your best interest to check this out. But anyways, this is all I got for you guys today. Remember, I'm not a financial advisor. None of this is financial advice. Hit the like button, subscribe, all that good stuff. As always, I'll be back with another video.